Bitcoin is an answer to the financial system, and over time, the number of users and people who become aware of its superpower, the more people move across. That is a secular trend of adoption. That's really important. If you own crypto or technology, you will outperform this entire thing. Just by technology or by crypto, and those are the only two assets that outperform the central bank balance sheet.
Hello and welcome to Crypto Street. In this video, we have the privilege of featuring Raoul, CEO and co-founder of Real Vision Group and global macro investor who will provide valuable insights into the crypto struggle and AI investments. Today, our focus will be on unraveling the secrets of Bitcoin's future. However, before we delve into our discussion, let's first examine the recent developments in the cryptocurrency market. Now, without further ado, let's begin our enlightening discussion with Raoul.
Bitcoin is an answer to the financial system, and over time, the number of users and people who become aware of its superpower, the more people move across. That is a secular trend of adoption. That's really important. The cyclical trend, the cyclicality, is the ebb and flow within it. So that's the boom bust of the economy. Not at a gigantic bust level, it's just a boom bust. Now, Bitcoin halving cycles correspond with all of this. Why? Is there some magic in that reduction of supply? Maybe. But Bitcoin came out exactly at the same time that all interest rates went to zero. They're all part of the same cycle. So every time we get into this economic cycle, it affects Bitcoin in the same way. But over the long run, the adoption, the secular cycle, means it outperforms everything. Because there's no secular adoption of the S&P 500. There's no secular adoption of General Electric, or that stuff's not really happening. Yes, there's an ongoing purchasing by 401ks, but that's really it. So that big mega trend is the observable trend that people can participate in, and it is going to more than offset what is going on with the debasement of currency. And that's to do with Metcalfe's law and the exponential trend of the adoption of a technological network or a technology itself. Great. So that's why Bitcoin charts over time just keep doing this. It's because it's exponential. The S&P 500 doesn't do that because it's not exponential. But the NASDAQ does. Most technologies do. And the reason why the NASDAQ keeps outperforming the S&P and keeps outperforming value stocks and makes people so angry is because it's all about the adoption of new technology. If you think about what's been driving the NASDAQ recently, it's the adoption of AI. Obviously, that's the fastest adoption of any technology in history. Crypto was the fastest beforehand, but this has eclipsed it. It's gone from, in 6 months, from basically 0 users to 100 million users in 6 months. We've never seen like it.
Bitcoin may be in line for a 60% upside if a long-term chart feature stays intact. Bitcoin is still wedged in a narrow trading range it entered almost 3 months ago. Market participants have little to go on when it comes to short-term price targets. Day-to-day performance has offered no decisive trend up or down, and $30,000 remains formidable resistance overhead. The market is still in the same position it has been in the past few days. Don't get chopped up, place some bids at the extremes and wait.
Now, as it becomes more public as a thesis, and Mike Howell at Cross Border Capital has been talking some elements of this, liquidity, you can see liquidity becoming part of the conversation on financial Twitter and stuff now. What I think we'll probably do is create boom-bust cycles. Again, you can't have the bust cycle going below the level of central bank liquidity because optically they make it rise. This is what people don't yet understand. But of course, the stock market should go down 90%. Can't happen. Literally can't happen because of the debasement. It's a money illusion. But what I think we'll do is see, hey, off we go to the races. That's what happened in 2018. 19, early 20, we actually diverged from the central bank balance sheet massively. because people are starting to figure out this game, which is the moment the Fed stop the tightening cycle, markets take off, because they know that the probability of more cowbell, more central bank printing of money, more interest rate cuts is coming. And so therefore we get boom bust cycles. So the boom times are too big, and then you get a bust. And people know that from crypto as well. The long-term trend remains intact, but we keep getting these huge booms, collapse, boom, collapse, but the trend is still up. I think that's what we'll see. We'll be more like the crypto cycle, which is pretty much what we've just seen as well. We had a big collapse last year, and now we're straight back into the boom as we're starting to forecast this. Yes, okay, let's get down to an individual level. Let's not get to societal level. I can unfuck your future, which is the series that we ran on Real Vision, by simply offering you the right asset. You get caught in this trap. If you own crypto or technology, you will outperform this entire thing. Now, if you're not wealthy enough to buy, set up a brokerage account doing that because it's complicated for you, you can do it with crypto for no money, and you'll participate not only in the trend of debasement, so you're not getting left behind, because if you're just getting an income and you're not buying any assets, you're truly getting behind. So your 401k may look like the S&P 500. That's not making you any richer. Just buy technology or buy crypto, and those are the only two assets that outperform the central bank balance sheet. So there's your solve at a personal level.
In a prediction this week, trader and analyst Credible Crypto said that $40,000 would not form the ceiling for BTC in 2023. He tweeted, "Expectations. The Bitcoin halving is in April 2024. Expect BTC to go sideways between 2040 for about 12 months, which is when we accumulate as much Bitcoin as we can. Once the halving hits, we start our next bull run to 100 plus into 2025.
My view is 2008 was the uncovering that the geyser is not a geyser, it's a volcano. They see it, and it's like the holy shit moment. So they did something unparalleled. The Great Reset happened. They reset all interest rates to zero. I had not realized this until recently. That was the debt jubilee. We will reset all payments to zero because we understand. And then Europe kind of forced the card, 2012. It was then okay. There's no way around this. So the blow up happens, but it's now disguised. And the disguise is the important next part of the story. Because what they did is somewhere around 2012, I believe, G7 made the agreement, learnt from the Japanese, which is...
G7 are the 7 biggest
nations in the
banks?
7 nations in the world.
Okay. Nothing to do with their central banks at this point.
No, but it's the finance ministers who get together. But there's a realization, and I think the Japanese realized it first. When your government debt is 100% of GDP, this is the really important point of the Everything Code. When your government debt is 100% of GDP, and your private sector debt is, for easy maths, call it 100% of GDP in debt. Okay, now interest rates, let's say they're 2% for easy numbers. So when the government has to pay, well, economic growth is what pays for debt, right? It's the earnings of the economy. So if economic growth is growing at 2% and interest rates are at 2%, then the government, which is 100% of GDP in debt, uses all economic growth to pay the interest. So then the private sector has got to pay its 2%. And that means the economy would contract, and this will continue in perpetuity.
Thank you for watching. We appreciate your support and engagement. Your insights on the future direction of the world of cryptocurrencies are highly valued. Please share your thoughts in the comments below. Don't forget to like this video and subscribe to our channel for more engaging content.